Hey, what's up, guys? Welcome back to another Technical Tuesday. Today, I wanted to touch on risk reward ratios. Some people might debate this as not being a technical aspect of trading. I view it more so as a technical side of things. Um, so, basically, what risk reward ratio is best? Well, as you might imagine, my answer is it depends on your strategy. But there are some basic guidelines and principles I wanted to sort of map out for you guys. So, if you look at the most basic, I guess risk reward ratio, we could say it would be like 1 to 1, right? You're risking $1 to make $1, or you know, obviously you could risk 1,000 to make 1,000, but the same concept applies. So like if you wanted to short right here, you know, 1 to 1 would look something like this, depending on your targets. But personally, when it comes to swing trading, I don't think a 1 to 1 ratio, risk reward ratio, is the best option to go with for a few reasons. Because, well, actually, really only one reason. The reason being is your win rate has to be really, really high, which, if you go back and take a look at my win rate video, this isn't really achievable for a lot of people to have a super high win rate, like 80% or even like 70% is really difficult to achieve, week after week, month after month. So, obviously, it depends too on your trade management, because if, you move your stops very quickly to break even, 1 to 1 might be a little more suitable. But the main reason why I'm against 1 to 1 is if you just look at this, let's say we did want it to short down to this area. Well, I would want to get out a lot quicker than if before price reached these areas. Like I wouldn't want to be holding a short if price was like over here. And so I for swing trading, I personally don't think that 1 to 1 is the best option. It just doesn't make a whole lot of sense to hold on to a trade for this long. Now for shorter term, like scalping, I personally scalp occasionally, and I use a 1 to 1. So I really think it depends on the strategy, and that strategy is going for more short term, quick in and out. So 1 to 1 makes sense because it's sort of like binary. It either happens or it doesn't. However, here in more of a swing trading context, it could happen a little bit. It could go in your favor a little bit, reverse, could go down here, reverse, it could go to there, it could go here. Like in swing trading, there's just so many more options and variations that I don't think 1 to 1 really accounts for that. So that's my view on that. Now, on the other side of things, if you're looking at risk reward ratios that are super high, like let's say, let's go down to like a 1 hour. All right, let's say we wanted to go short right here. Right, let's say we wanted to go short right there, and we wanted a super tight risk reward, right? Like really, really tight. Like we were positive this thing was headed lower, and we think it was gonna head, I don't know, who knows? Let's say like here, right? 6 to 1 risk reward, which is obviously great. It's great to risk $1 and make 6, but you will find yourself getting stopped out way too much, right? Because on the hourly, or even like a 2 hour or 4 hour, there's going to be some consolidation, and you have to account for that, right? Because you want to make sure when you're right that you're in the trade. And if your stops are too tight, I don't know how many times people have DM'd me or posted, oh, I was in that trade, but I got stopped out, and their stop was like 30 pips. For a target of 200. So I do think that there is a good balance. So for me personally, I like usually 1 to 2 or 1 to 3 risk reward works the best, because that gives me a good amount of flexibility in terms of price movements. It keeps me in the trade longer, but at the same time, it doesn't give me too much leeway like 1-to-1 where, I'm staying in the trade way too long, or I'm in the trade too short, like with a 1-to-5 or 1-to-6 risk reward. So like, let's say I wanted a short right here. For me, it might look something like, maybe something like that. Like that would be like an average trade for me or something. Because right, it gives me some chance for this thing to consolidate and go sideways. But at the same time, it's not keeping me in the trade like a 1-to-1 for way too long. So I do think that a lot of times people overlook this aspect of things. They think not so much with 1-to-1, but more on the like 1-to-5, 1-to-6. I think a lot of newer traders tend to set really tight stops, and obviously they have really good intentions. It's to not risk that much money and maximize profits, which is great. But I think a much better way to do that is to stack positions, add on to winners. Is a much better way to maximize profits and limit your downside by setting previous positions stops to break even. For me personally, I find that's what works best. But yeah, I don't like this. This is 30 pips. It doesn't give much room at all for the trade to move around, right? Because who's to say this thing couldn't go like that and then head lower? You can't control every single price movement, but the general idea is to get the overall direction right. And so you need a good balance there. So I hope this video helped you guys. Like I said, some of you guys might not consider this technical analysis. I'm sort of mixed on it, but I thought this would help some guys out. So I hope this helped. I will see you guys on Friday, and I hope you have a great week.